Our favorite stocks for 2026 and our favorite sectors. What stocks do we think could potentially double over the coming year and how you can stand to benefit from that? The reality is, January isn't a special month. It doesn't do anything special. More, what is important to you and to your investment portfolio is the trend and following trends that exist. One of the most uncomfortable things about trading in general is that it is very difficult once a stock has already moved 100% to have the conviction to stay in the trade for it to move another 100%. However, that is essentially the basis of trend trading and trend following, and why some of the strongest long term investors have made most of their money by seeing where money is continuing to cycle into and where those trends are strong enough to persist. Trying to bottom pick is often very complex and requires a lot of technical analysis and requires time. You have to be willing to sit in those bottom bases, sometimes for months, even sometimes potentially years, before you get those strong breakouts. However, if a company has been basing for 6, 7, 8 months, or even longer, then you can assume that as long as that company continues to perform, their earnings continue to be strong, they continue to have a strong fundamental thesis, they have a really positive opportunity to continue to move in the coming years. Now, we are fundamentally options traders, so our focus doesn't require shares to move 100% in order for us to make 100% a return on our investment. However, finding those trends does make trading options a lot easier because you're not having to scalp in and out of trades. You're able to just sit in those longer duration moves to the upside. Overall, the market is bullish. Systematic trading, systematic buying, dollar cost averaging, the number of long only managers that are out there in the field really push for the market to continue in a strong bullish trend. We do have periods of consolidation, obviously, and every market does require some kind of correction in order to allow new participants to start to participate. But overall, you should really be looking for bullish trends to persist instead of constantly trying to find a top in the market and then missing the rest of the move. Imagine people who invested in companies like Nvidia or Amazon or Apple 10, 15 years ago. And yes, the COVID pullback was difficult. The April pullback on tariffs was difficult. And there have been pullbacks in the market over the last 20 years. But overall, you may have missed these last 3 years of just massive returns in the markets because you were trying to find the top instead of trying to find a way to participate. Now, we do think that there are some sectors that are just bound to do really, really, really well in the coming weeks and months. And one of the main sectors that I really like is the space sector. That is the sector that we at Trade Speakeasy have been strongly participating in for the last 2.5, 3 years. In April, we actually did end up getting a bunch of shares assigned to us on the April drop, but that served our accounts very well. Very shortly after, you could see companies like Rocket Lab, ASTS, even Lunar, and now Red Wing are finally had these really strong and robust moves. So from our entries at the very bottom of that drop in April, we've already seen more than 100% return on our shares. The fact that we have utilized an array of option strategies to be able to really increase our returns, we have seen multiple hundreds of percent return just because of the way we are combining strategies. I think in 2026, you will see stocks like the space stocks give you 100% return potentially over the coming year. But by being able to partner the correct option strategies, you should or could be able to see 2, 3, 400, or even 1,000% return on your investment if you traded wisely and you trade with strong conviction about what the chart is setting up. So let's look at some of those charts. Overall, we just see a massive investment at the moment, like from the government, everything relating to defense. And even though most people like to think of defense like in things like Lockheed Martin or others, there really is a massive move towards space. The fact that for data centers to be out in space, the entire environment would be much easier to cool. The environment to manage data centers in space would be much easier. Just satellites, drones, like every aspect of what is going on in space and the potential that we have in space is going to benefit this sector. Of course, the fact that SpaceX is going to be IPOing in the near future also just draws a lot of attention into this space. For people that may not necessarily want to jump in on the IPO because of the fact that there aren't share valuations, and so it is difficult for people to have a historical record, we do think that more money overall could be transitioning widely into the space sector and into some of these space stocks. As you can see, Lunar is already back to all-time highs, but it is a company that all the way since the April tariffs has really been basing, and it's only since November that we have started to have a breakout. And we think that this stock can continue to perform and continue to have breakouts as they get new contracts, as they continue to form new partnerships moving forward in the coming year. However, you do have to be cautious that this might not be the best time to buy shares. However, if you know how to use things like iron condors or calendar spreads, that would be the best type of position to participate in a trade like this, and maybe using short puts down at really key strikes, like down at the $15 mark, to be able to wait to participate and dollar cost average into the shares at those lower levels. Now, another company that's done very, very, very well is ASTS. As you can see, our expectation is that ASTS can continue to move all the way up potentially to the 145. But of course, ASTS has already moved quite significantly again since those November dates. All of the conversations surrounding defense, the Golden Dome, the potential for what would happen in Venezuela, the potential move on Greenland has made these stocks really popular at the moment. So of course, these could continue to move. Now, how we are playing ASTS is we're both playing the bottom and the top side. We continue to sell short puts and put credit spreads to the downside, trying to benefit from that upside move on the decay in the value. But we are also participating with long call calendars up above at those key strikes, and some of them are quite long duration trades. Now, for those who know how to trade options, two strategies I think would be really brilliant would be longer duration calendars and longer duration diagonals. Some may call them leap diagonals or leap calendars, but that's a very good way to participate at a really low cost of entry, but be able to participate in that longer duration up move. ALAB has not yet broken out. ALAB and Red Wing, or RDW, their charts continue to follow each other quite closely. Now, Astrolabs or ALabs and RDW are coming up to a really, really key resistance area. So it is very easy to see if you get that breakout move. And if you get the breakout move, then you might just want to participate with long calls to be able to push this all the way back potentially up to the all-time highs at the 260. Now, ALAB isn't a dirt cheap stock. It's not cheap like some of the other stocks like Lunar, which is only $21 a share. So naked short puts may be difficult for your account to cope with because you would be looking at almost $18,000 of margin being held per short put. So instead, you may want to utilize something like a put credit spread to be able to participate in the trade while you're waiting to see if you get the breakout move. And if you do get a breakout and retest down to this 182, then looking for a move to the 220 is not unreasonable or irresponsible. But participating in that kind of trade, again, with something like a calendar spread allows you to both be long and short the stock without being naked long calls and then feeling stressed by maybe the amount of duration you have on the trade or the cost of the long calls, or potentially putting you in a situation where you're getting the long calls too far out the money because you're trying to reduce the cost of entry. RDW also has this similar kind of rounding bottom and now sitting at a breakout in a price gap. The great thing is this is also a less expensive stock. So this is a great stock where if you are trying to learn how to use some new option strategies, this is a great stock to potentially buy 100 shares and sell against it a short straddle. Now, If that's something you want to learn how to do, that is something that we teach in our Discord. And for all of these stocks, you can already see that there have been a couple months of positive activity. Now, if you want to get all of our trades immediately, then you should consider joining one of our educational groups or joining our Discord in order to get our callouts immediately upon entry, because we have already been participating in almost all of these trades. Actually, in all of the trades that I've discussed, we have actually already been in these trades since October and November of last year, and we are just continuing to participate in the up move. Now, on our trades, we're already up 2, 3, 400%, but we have the conviction to remain in those trades and to continue to add trades because we do think they will continue to have strong activity going into or in the rest of 2026. Another company that I really like is Karman Holdings. This is a drone stock, and it has already, again, had a breakout. Those who watch any of our previous videos or were watching our Sunday night lives, I talked about this stock multiple times. I talked about it back at down here, back at the 45. I talked about it again at the 66. Of course, you may have taken some heat on this down move had you not been prepared. But of course, we did talk about the fact that this was trending in a channel and then had a really strong breakout to the upside. It has had this squeeze presently, not just because a lot of people are maybe short calls at a 110, but actually the significant activity is because this is one of the key companies working on drones. And with everything going on in defense and all the activity going on with China, with Russia, with Iran, with Israel, push the United States and Congress to really divert a significant amount of taxpayer money into the area of defense. And drones is one of the areas that has benefited from that, will continue to benefit with that, with ongoing contracts and new contracts, and with a lot of support for research and development. So we do think that Karman can continue to move. Obviously, buying at the all-time highs doesn't make sense. So I'm not saying add shares from here. You do want to start trying to get shares closer down at the 85. And in order to do that and still be able to participate with shares, you will want to do something like short puts. It won't be cheap because this obviously is not the cheapest stock that's out there. But if this is a stock you do want to hold for the long run, then you may be able to sell 3 or 4 months out on a short put, with the key idea that you are actually trying to participate in this trade and you do want to get tapped in on those shares. And the $85 strike is not an unreasonable price for this company. Now, just some other stocks. I think that the AI sector is going to continue to move. I know a lot of people talk about the fact that we're in a bubble, we're in a bubble, we're in a bubble. But the reality is we are in a very key time in history where we are able to simultaneously do research and development, actively participate in implementation in companies, and be able to increase productivity. In previous years, that was not how companies could implement new devices or implement new software or implement significant changes. Very often, if you wanted to make massive changes on factories or expansion in manufacturing or expansion for data or expansion for software, you needed to have a significant amount of capital sitting on the side, which a lot of companies didn't have. And you needed to have the capacity to be able to make those updates while not taking everything else offline. And this required almost having double staffing, which was a significant cost to companies that had that wider manufacturing. But now, because so much of the work is done by robots or is done through different technical advances, we can see that now there's a lot more simultaneous research and development plus implementation in a lot of different companies. You can clearly see that on something like an Amazon, which every 3 to 4 months, they're announcing new developments that they aim to implement. And then the process to implementation to that beta stage is almost an insignificant amount of time, unlike years previously where it might have taken 2 or 3 years to start the true implementation process. So 2 companies that I really like that I think are small enough companies that they'll continue to have this dollar cost averaging. They'll continue to find funding. They will continue to have feet in the market just because they don't have that much competition in their tiny niche, is an APLD and a Lemonade. These have continued to do really well. And as you can see, These companies like to give you a nice pullback and then give you an opportunity to participate in the up move before earnings, and then they give you a nice time of consolidation. This allows you to do things like playing to the upside. So for us, we like often to play call calendars and to partner that with short puts, especially when lemonade was down here at the $25, $30, $45 value. Having those short puts didn't overwhelm the margin requirements. Now, for most of our Discord members, I've been telling them to scale into shares with returns on their investment with options because of the fact that these companies stand to do very well over the next 2, 3, 4, 5 years. And they are cheap enough that by participating in these shares now and allowing them the time to grow, it doesn't dominate too large of a position, even for a mid-size account. So friends, I hope this gave you some great ideas on how you might want to participate going forward. But some other sectors that we really think are going to continue to do well in 2026 is going to be energy and mining and minerals. The reality is that at the energy breakout doesn't just have to do with what's going on in Venezuela, though that has significantly dominated the conversation as of late. But the reality is that data centers require energy, and nuclear stocks and nuclear companies need time for build out. It takes time to build out nuclear facilities and to get those online. So a key way that a lot of companies are going to have to subsidize their energy costs or energy spend will be through natural gas. And that does then mean that there is going to be bullish activity going forward because it is the most accessible, it is the easiest to bring online, and it is an area where a lot of investment has been diverted because of the Ukraine Russia situation, where, especially in the European Union, a lot of countries found themselves unable to find sustainable or sufficient LNG. And so a lot of companies aggressively were pouring in capital to build out that area of the market. And so because of that, there is a lot of potential going forward for natural gas. And of course, activities in Venezuela have encouraged new funding and an encouragement from the government to the energy sector to consider how they might be able to take advantage of the accessibility that they now have in Venezuela. But what that actually looks like, we will not know for certain until companies like Halliburton and Schlumberger and Exxon and Chevron start to exploit those opportunities. But other companies that could do well will be companies like Devon or Duke Energy. And so, there are companies out there that could benefit from this. But I think overall, the key benefit to the energy sector really isn't Venezuela, but it is a lot more about what is going on with energy, the energy need across the United States, especially when it comes to factory buildouts and data centers. And then, of course, you have mining and metal. There is no manufacturing development and data center buildout that does not utilize metals. And so, therefore, we continue to be bullish on sectors, especially industrial metals like silver and copper. Now, those are two areas of the market that we were very, very bullish on in 2025. And both copper and aluminum and palladium and silver and gold have done extremely well all through 2025. Now, the reality is that energy and mining and minerals run through cycles. And when they start really strong bullish cycles, usually those can persist for anywhere up to 10 years. Now, that is a historical record. And the fact that we've had so many technical developments along the way, we have to be careful that, yes, history rhymes, but it doesn't always repeat copy paste. So I'm not expecting that the energy and mining and minerals sector will have, or the industrial sector overall, will have a 10-year bullish run. But I do believe that in 2026 and into 2027, there are stocks that can stand to continue to do very well. They have developed a trend. And as I was saying before, that the companies that are most likely to give you a 100% return are actually stocks that already gave you a 100% return. Why? Because they're companies that are showing you in their earnings that they continue to be strong, they continue to dominate in their sector, they continue to have a moat, and they continue to be competitive. And as long as those factors remain intact, you have a strong reason to continue to participate in those areas. But we're not going to analyze all of those charts today because we really wanted to focus on our 5 favorites, and that really is in the space sector. All right, friends, I hope that you enjoyed this and that you're able to put this into use. The key thing is that it's not going to be what you participate in, because 2026 could shape up to be a very strong bullish year because of the amount of stimulus coming into the market. We just have to accept that. But really, it's how you participate in the trades. As you saw, as I was looking at each of the charts, I told you there is a way to participate, but there is a wise way to participate that helps you reduce risk and helps you have longevity in the trades while you're waiting for the underlying to give you the specific performance that you are looking for. Too often, people participate in options with just long calls and long put. But most often than not, the underlying won't just give you one trend. It gives you oscillations towards its trend. So it will give you higher highs and higher lows. But in each of those fluctuations, you are having to make a lot of mental decisions about when to get in and when to get out. And more often than not, people go long at the top, try to get short at the bottom, and are offsides in their trades as the price oscillates to the upside or to the downside. If you want to avoid that kind of stress, then you do want to participate in multi-leg option strategies, which allow you to be both long and short the market and mitigate risk significantly. But if you want to learn how to do that, then you do have to be inside of our community to access all of our educational material, or to be inside our Discord in order to get our call outs immediately when we actually enter the trades. If that's of interest to you, check out the link below. Like and subscribe if you like these videos and would like to see more of them on a regular basis. All right, bye for now, friends.